I'm Brad Stone in for Emily Chang. This is the best of Bloomberg Technology, where we bring you all of our top interviews from this week in tech. Coming up in the next hour, we just became a real car company. Those are the words of Tesla CEO Elon Musk after reaching his goal of building 5,000 Model 3s in the final week of June. But questions swirl surrounding the car's quality. Plus, Dell is going public again, offering a cash and stock deal worth $21.7 billion, entering a new stage of a multi-year turnaround plan. And more institutional investors are diving into cryptos, and Coinbase is taking customers. How one of the world's biggest crypto exchanges plans to sign billions under management by the end of the year. But first to our top story. Tesla engineered a late quarter production burst with the Model 3, but it delivered fewer sedans to customers in the second quarter than expected. However, the late surge has thousands more of the cars in transit towards buyers. And for the first time, Tesla exceeded its target of building 5,000 Model 3s in a single week. Yet on Tuesday, Bernstein analyst Tony Sacconaghi questioned Tesla's claims that the Model 3 cars made in the 10-covered production line were of the same quality as those made inside the plant, and the stock tumbled off the doubt. We spoke with Tigris Financial Partners Chief Investment Officer Ivan Feinseth from Los Angeles on Monday, along with Bloomberg Businessweek's Max Chafkin in New York.
The stock is down because of auto trade issues more than it's up because of the Tesla meeting the milestone, but it was up in the morning, and I think the fact that they have now produced 5,000 Model 3s in the week is very powerful and very positive.
Ivan, the big question is it sustainable, right? All-nighters, tents outside the factory, 5,000 cars is a great accomplishment, but is this now a company that can routinely make 5,000 Model 3s every week?
I believe they can. I believe the factory has more than enough capacity to produce the cars. They are in a facility that once produced over 1,300,000 cars when it was a GM factory in the 70s. So there's more than enough capacity. Plus today they have one of the most advanced auto assembly lines ever made. So I think that they will be able to sustain the production level, and this does take Tesla to the next level of taking it from a niche car producer to a mainstream auto manufacturer.
Max Chafkin, you've covered Tesla for years. Elon tweeted on his 47th birthday that he had spent the night in the factory. I mean, they can't take a break, right? There's a lot of pressure on this company. Can they keep it going? Is this the turnaround that perhaps some Tesla watchers hope it is?
I mean, I think you have to hope that the way Elon Musk has been sort of living, where it seems like he's been up all night, he's sleeping in the factory, you got to hope he's going to at least take a day or two and just, rest, because all these Tesla employees, as he indicated in this email that Bloomberg published yesterday, have been basically working nonstop to hit this milestone. Now, I think what they're doing now is not sustainable. The hope is that they will, as time goes on, they will be able to improve the sort of robotic manufacturing line, and that'll be able to get them up to around 5,000 cars. So the idea would be to hit the same kind of production number without looking like, and feeling like you've been punched in the face, every day, which has kind of been what's happening to Tesla.
Ivan, Elon tweeted, or he emailed employees, I think we've just become a real car company. That's pretty ironic, considering the market cap of Tesla exceeds many traditional car companies like GM and Ford. Why did he write that?
Well, because the Model 3 production level is the transformational car for the company. It does take them from a niche car producer, which originally started producing, selling 20,000 cars a year, to getting to 100, which could be at the 12 months from now, if they maintain the Model 3 production rate, producing over 600,000 cars a year, which makes them a real company and they're then able to fill what is very strong demand. And then they roll out the production of the truck next. So they are evolving. But I think that they view themselves more of a technology company than a pure car company, because they do sell solar panels and the battery walls as well.
If you're a Tesla customer who's had an order now for a while on a Model 3, does it concern you at all that perhaps your automobile was made in a tent outside the primary factory? I guess it's another way of asking, do we know whether Tesla has cut any corners, Ivan, on the quality of these automobiles?
Well, only time will tell that, but overall quality of Tesla's cars are very high. The customer satisfaction level is very high. The enthusiasm for the car is very high. And really the strength in the car is its simplicity and the power and the design and the technology. And they've had very few mechanical or technological issues, and they do fix a lot of, they monitor all the cars and do fix a lot of the software issues by pushing down software updates from satellites. So they are always adjusting and improving the cars that have been on the road for a long time.
Max, Elon's Twitter feed has been such a joyful circus show over these past few weeks and months. I don't know, does the company have to grow up now, or are we going to continue to be entertained by Elon and his pushback on some of Tesla's critics?
Yeah, I mean, I have to say, I think the real car company thing, he was sort of joking. I think Elon has felt for years that Tesla is a real car company, and that was kind of a dig at, at skeptics. I think one thing that's noteworthy about this big push to hit 5,000 is that this is the first time that I can think of where Elon Musk has really sort of paid attention to what Wall Street and what outsiders are saying. Outsiders said, you have to hit this milestone, and he basically said, okay, I'm going to do whatever it takes. We're going to, as he said in the email, fly, production lines in cargo planes. We're going to build this giant tent. We're going to do everything we can. And I think that is kind of interesting. It strikes me as a concession that he's made, both to Wall Street and the outside world, where he has to start acting sort of more like a conventional publicly traded company.
Ivan, you mentioned some of the upcoming milestones, the new benchmarks that Tesla will have to meet. Are they going to have to go back to the capital markets and raise more money to do things like the truck?
Absolutely, they need to, and they should. But however, the meeting of this 5,000 car milestone will make it a whole lot easier. If they indeed become profitable by the end of the year, or at least are on track to do so by the end of the third quarter, will also make it much easier to raise capital. But yes, building cars is a very capital intensive process, and they will have to. And they should raise money because they've, excuse me, every time they've come to the capital markets, they've gotten well received. So I think that they will come at the end of the year.
Max, last question to you. We started the conversation by talking about a little bit of the underwhelming market reaction to Tesla meeting this goal. Has some of the halo, the glow faded from Elon? Are the markets looking at Tesla maybe a little bit differently these days?
No, I don't think so. I think the reason for the muted reaction is that this 5,000 milestone was like a terribly kept secret. And I think by design, Tesla, through emails from Elon Musk, and if you're reading his Twitter feed closely, they were telegraphing this for about a week. So I think basically people knew they were going to hit it. There was just some question of, how they were going to do it. And I think we still don't know exactly how they were able to hit this milestone. But you got to think, this is a big moment for Elon Musk, big moment for Tesla, and for electric vehicles in general. I mean, 5,000 cars is nothing to sniff at.
Okay, Ivan Feinseth of Tigris Financial Partners and Bloomberg Businessweek's Max Chafkin, thank you both for joining us. Coming up, what's old is new again. Michael Dell is taking the company he built from the ground up back to the public. Next. And if you like Bloomberg News, check us out on the radio. You can listen to the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. The world's largest private tech company is going public. Again, Dell is planning to return to the public markets by buying out its tracking stock in a cash and share swap deal valued at $22 billion. In January of this year, CEO and founder Michael Dell preached the benefits of remaining private.
as a privately controlled company, your time horizon is very different. And so you start, you reimagine your business. You think about your business in years and decades. And it allows you to reconceptualize, how you're investing and what the real priorities are.
Bloomberg Technology's Nico Grant covers Dell and joins us here in the studio. And in New York, Bloomberg opinion columnist Brooke Sutherland, who's been writing about the Dell move. Nico, let's start with you. This is not a traditional IPO, yet Dell is going public. Tell us how they're doing it.
Yeah, so this is a direct listing that would be more akin to, say, Spotify's direct listing that we saw recently. The idea is that Dell gets all of the benefits of going public with none of the drawbacks. You're not seeing Michael Dell going on some roadshow and convincing investors you should invest in my company. And you're also seeing that it gives him a tremendous amount of control. In the process, it helps to simplify Dell's corporate structure, because tracking stocks are obviously very unusual. It was meant to mirror the value of VMware, a software maker based here in Silicon Valley that Dell has a controlling stake in. And so it gets rid of that. It has more direct control over VMware, and it also gets to float on the public markets and get all the valuation benefits, get all of the share benefits without traditional drawbacks.
Brooke, you called this in your opinion piece today the path of least resistance for Dell. Why?
Because I think the thinking among VMware shareholders was they very much wanted this to remain a publicly listed independent entity, and they did win that today. I guess at the cost of an $11 billion special dividend that'll fund the cash component of the buyout offer for the tracking stock. But, that they pushed very hard for that. They were very vocal in wanting VMware to remain an entity that they could invest in as a standalone. Now, as I argue in my piece, winning that is not necessarily the best outcome for all involved here, and I really view this as more of an intermediary step. It does help Dell simplify its structure, but it doesn't go far enough, at least in my opinion. You still have VMware for, as much as shareholders wanted to push back against being part of Dell, it is very much part of Dell. They have a majority shareholder that calls a lot of the shots for the company, and most stocks with that kind of dynamic do tend to trade at a discount.
Nico, we just listened to Michael Dell singing the praises of being a private company. That was not that long ago. What's changed?
I actually saw him in April singing the praises of being a private company. I think what's changed is a couple things. If we consider the timing here, it comes about 5 months after Dell said it was considering its strategic options, and it comes about 5 years after the company started this big turnaround when it decided to go private. It saw that the hardware landscape was changing around it, and it really needed to try to figure out how it could catch up. It thought the easiest way to do this was with the least amount of scrutiny possible. And so I think that Michael Dell is feeling more confident than he has in a while. We saw in the last quarter, Dell saw double-digit gains, particularly in servers and in storage. It has been a really good IT spending environment after years of either sort of middling or declining IT purchases by companies. And so he thinks now is the time to, again, get all the benefits, which could even include M&A benefits. He could do a share swap in the future rather than having to pay cash, because that's a precious resource. They don't have, a tremendous amount. They do have to pay down about $40 billion of core debt.
Brooke, though, it does seem like we've seen this movie before, and Dell sort of famously belly flopped as a public company, particularly as the cloud transformation swept over the enterprise computing space. Are you confident that it is different this time around?
I think the proof is very much going to be in the results, and I think we have to see how they handle this. To me, this doesn't necessarily solve a lot of Dell's problems. A lot of the reason why they were looking at these types of transactions in the first place is because the company is burdened with a very significant debt load from its buyout, from the 2016 purchase of EMC, and it has to find a way to deal with that. And a lot of the thinking was that it would use VMware's balance sheet to shoulder some of that burden. Now, obviously, that's not happening. As Nico says, this does not rule out the option of potentially merging with VMware down the road. But again, then I just come back to this is more of an intermediary step than a long-term solution.
Yeah, so what is then the next step? It's you think it's a potential merger with VMware or a direct IPO, sell more stock to the public?
I think potentially, but also we have to get this deal for the tracking stock done. I mean, I will point out Dell is paying a premium for the tracking stock, but you're still talking about a very material discount to where VMware shares are trading. And there are some big holders of that tracking stock. So Elliott is one of them. Carl Icahn has said he's a holder of that tracking stock. So is this going to be good enough for them? I think that's something we're going to have to watch.
Nico, last question. Talk a little bit about the competitive environment that Dell faces right now. You've got HPE and NetApp. You also have the big cloud providers like Amazon and Microsoft. So how does Dell fare as a public company considering the competition?
So I think, comparison to HPE, which is one of the closest companies, Dell will probably, in the short term, should it get past, the investors and get this done in the fall, trade higher and with more momentum than HPE, which has been challenged. I think part of that is because of the close integrations with the software makers. Dell also, we have to remember, leads the market in so many of these categories when we think about hardware. And they're leveraging VMware as much as possible, which has a lot of credibility among companies that want a more modern infrastructure when we think about IT. And so I think that when it comes to the public clouds, Dell probably will not see their explosive growth. And should we see the IT spending environment, sort of cut back a little bit for the hardware vendors, then, Dell's stock is going to take a beating.
That was Bloomberg's Nico Grant and Brooke Sutherland. Coming up, e-cigarette maker Juul is seeking more than $1 billion in its latest funding round. We'll discuss how the company is expanding while traditional tobacco fades. This is Bloomberg. Electronic cigarette startup Juul Labs is raising $1.2 billion to target the global vaping market. That's according to people familiar with the matter. The funding round would value the company at $15 billion, making Juul more valuable than some of Silicon Valley's biggest names. That's a huge jump for a company that's less than 3 years old. Bloomberg technology reporter Olivia Zaleski, who broke the news, joins us now. Thanks for joining us, Olivia. So a lot of people probably haven't even heard of Juul Labs. Well, tell us what it is and why they're raising so much money now.
Yeah, so Juul was created essentially as a replacement to the regular tar-burning cigarette. And the people who created it, they came out of Stanford. They thought, hey, we're going to create this product that will be better for you than smoking a traditional cigarette. It doesn't have the tar. It uses a vapor that you then inhale the nicotine. And they thought they were actually doing something really great for the world. The problem is teenagers love Juul, and it's become extremely popular in schools, especially among high school students, and it's become a very controversial product. So there are a lot of investors who are not willing to invest in it. However, we're seeing that a lot of investors are willing to invest in it because they are raising $1.2 billion, which is pre-money $15 billion valuation, post-money over $16 billion.
Well, that's extraordinary. And one of the numbers in your story that jumped out at me was that Juul has captured 68% of the U.S. e-cig market. And that's with companies like Philip Morris trying to get in here. So what did Juul do right?
Yeah, it's pretty remarkable. They just launched in 2015, and they already have 68% of the vape market. They're also replacing traditional cigarettes. We've seen Philip Morris's stock in this year alone go down about 24%. British American tobacco also down about 24%. Japan tobacco down about 15%. And what we're seeing is that e-cigarettes are growing. They grew about 3.5 percentage points this year, and cigarettes are going down. They went down about 4 percentage points a year. So people aren't necessarily quitting smoking traditional cigarettes. They're just replacing traditional cigarettes with vaping.
Right, and the U.S. Food and Drug Administration now is, of course, looking into this. They've asked Juul for more information, right, about how Juul markets to teenagers. So what are the regulatory challenges for Juul, and what are they telling the FDA?
Right, so in April, the FDA actually knocked on Juul's door and said, hey, we need to know more about this product. We need to know, what are the health concerns? You need to provide us with your research. You also need to tell us about your internal marketing materials. What were you talking about in meetings? Are you trying to target children? Which, that's sort of like an audacious ask. Juul, of course, says we do not target children. You have to be 21 years old to purchase the product.
Even though they have candy-colored flavors.
You know, they've actually tapered that down. It's the other vaping companies. There's one called Candy Pens. You know, it's interesting that they're targeting Juul because Juul's so successful, but there are lots of other vaping companies that actually have more kid-friendly flavors and colors.
And what about the health questions that Juul is likely to get? I mean, they could say this is a healthier alternative than traditional cigarettes, but still, I would imagine not good for you.
Yes, some health experts say that, you know, it's not bad and it's much better than smoking a cigarette. Others are saying that it causes this problem called popcorn lung, which I'm still trying to understand, wrap my head around.
Doesn't sound good.
Yeah, it doesn't sound good. It's relatively unknown at this point. It's a new technology and it's a new product, so there are a lot of questions about it. What we do know is it's extremely popular, and this is one to watch. This company is on a rocket ship.
And last question, very quickly, they're raising $1.2 billion. What are they going to do with it?
So they're planning to expand outside the U.S. Juul isn't even sold outside. Well, it's actually sold in Israel, but they're going to expand even further. They want to go to Asia and South America.
Thanks to Bloomberg's Olivia Zaleski here in San Francisco. Chinese smartphone maker Xiaomi raised only $4.7 billion after pricing its Hong Kong IPO at the bottom of the range. The pricing values Xiaomi at about $54 billion, roughly half the initial target. Still, it remains the largest IPO in the region in nearly 2 years. Emily Chang spoke with Jim Suva, managing director and senior analyst at Citigroup, about Xiaomi's IPO and how it fits into the global tech landscape.
The smartphone industry, as you know, is highly competitive. In fact, super competitive. In fact, Apple has clearly said they're not interested in market share only. They want profitable market share. And so some of the statistics out there, whether it be a phone made by Xiaomi, Vivo, Oppo, Huawei, a lot of these brands that we may not see up and down the streets in America are growing very fast globally. The question is profitable share growth, and that's really what Apple's focused on. We expect the world to be very competitive in smartphones. You cannot leave your home without it. It's part of your DNA and who you are today.
So do you expect Xiaomi to really stand out or just be one of many?
Well, I think it will draw a lot of media and investor attention of a name that maybe not everybody globally knows about. In Asia, their market share is very strong. In the US, you simply don't see them very, very frequently. This, we think, will bring some more attention to it. It will help it stand out. But we do want to importantly note that we believe that Apple has always seen this on the radar screen. Years ago, there were other companies that were supposed to dethrone Apple, and we firmly believe that Apple is a stock that you want to buy and own right now, and there will always be competition. Whether we talk about Xiaomi, Vivo, Oppo, Huawei, all these other brands, there's a lot of competition out there.
And you do have a new note out on iPhone pricing, despite the market saturating, despite the fact that Apple's own iPhone sales are potentially plateauing. You're still optimistic. Why?
We are. One thing is to note that Apple services are really growing. So when you buy a new Apple phone, people are doing in-app purchasing on their games, on their purchases, as well as buying Apple Care.
But services revenue is never going to outpace hardware revenue.
You're correct as far as total amount of the company. Regarding the company's total units, we think that they're going to grow low single digits. Now, importantly, we see the surprise is going to be on the trailing models, the iPhone 7 in India and in China. Not so much the iPhone 10 that you and I have here in the U.S.
That was Emily Chang speaking with Jim Suva of Citigroup. Coming up, back to Tesla's newly released production figures, why hitting this much-lauded milestone could be a double-edged sword for the car maker. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. This is the best of Bloomberg Technology. I'm Brad Stone in San Francisco. Back to Tesla. Elon Musk hit his long-delayed target goal of producing 5,000 Model 3 sedans in a week. Musk went to great lengths to hit his mark, including constructing a giant tent housing an assembly line. Now the CEO has the challenge of winning over doubters who say this is just not sustainable. He also may need to address the accusation made Tuesday by Bernstein analyst Tony Sacconaghi that the Model 3 cars made on a tent-covered production line were not of the same quality as those made inside the plant. We caught up with Bloomberg Opinion's Liam Denning.
Fair play to the company. They hit their 5,000 a week target like they said they would. And I think, a lot of bulls will take some comfort from that. But I think it sort of misses the bigger picture here, which is, to be a profitable car maker, which Tesla has yet to prove it can be, they need to have sustained high volume, high quality production, and hitting that target in 1 week at the end of the quarter, kind of in a repeat of what they did at the end of the first quarter, it doesn't prove that. It hits a moment in time, it hits that one target, but it doesn't prove yet that they're on that sustainable footing.
You noted in your column that the burst week at the end of the corner does seem to set a new baseline for Tesla weekly production. Are you confident they can do that now with the 5,000 Model 3s per week?
It's tough to say. I mean, what I observed there was we're just going on the last 3 quarters, so it's not a huge number of data points. But in general, what they've done is they've hit these burst weeks at the end of the quarter, and then that kind of sets the average for the next quarter. So based on that, you might think they can indeed keep going at 5,000 a week. In fact, I think in today's release they talked about getting more to like 6,000. But I think the issue here is, can they do it profitably? And if I think about, for example, the tent that you highlighted, this second assembly line that they put up. Now it looks like they made about 1,000 cars on that last week, give or take, and if they're working 24/7, which they seem to have been doing, that equates to about 1 car every 10 minutes, and that is nowhere near what you need to be getting for a profitable mass market car maker.
Liam, Tesla was so focused on this 5,000 cars per week goal, it really came to, in some ways, define what observers of Tesla were looking for. What's the next milestone or benchmark that people will be looking for to grade Elon's performance here at Tesla?
Well, I think, 2 things that will be interesting. One is obviously the results that come out in about a month, and there we'll see what the cost of that burst has been in terms of profitability and cash flow. Obviously, the other big one coming out now is the company insists that it will get to GAAP profitability and some form of positive cash flow. It's not quite clear what later this year. I mean, that is really the key for this company. It needs to show that it can actually turn a profit, produce a mass market car, and and become self-funding. Becoming self-funding is the key here.
Okay, profitability and self-funding. Bloomberg Opinion's Liam Denning, thank you for joining us.
Thank you.
Coming up, one of the world's largest cryptocurrency exchanges is going live with a new custody service. Details on Coinbase's new customers next. This is Bloomberg. Just last week, Coinbase Custody accepted its first deposit and is now open for business. The cryptocurrency exchange says 10 hedge funds and family offices have begun using the custody service. The goal of the service is to safeguard digital tokens in a manner similar to traditional securities. Coinbase aims to have 100 large institutional customers by the end of the year, with as much as $5 billion in assets under management. Joining us now with more detail, Adam White, Coinbase Institutional VP and General Manager. Also with us in New York, Bloomberg Executive Editor and host of What You Miss, Joe Weisenthal. Thank you guys for joining us. Adam, maybe let's just define our terms. Not everyone is probably familiar with what custody means, what terms like cold storage means. So talk about what you guys have made live today.
In the very simplest description, Coinbase Custody launching today represents a way for institutions to be able to store their cryptocurrency in a safe, compliant manner. when people look at the space, right, there's been a history of security incidents. At Coinbase, we've always made security our #1 goal. And what we heard is as we are moving into the more institutionalization of the space, large hedge funds, large brokerages said, look, we can't begin trading cryptocurrency until we have a safe way to store it. We announced at the end of last year we were going to begin building Coinbase Custody, and we launched it today, and we're already serving about 10 hedge funds.
Crypto prices have had a rough ride this year. They've been characterized by volatility for a number of years. Have institutional investors stayed out because of the absence of this kind of service? And will this maybe rectify some of the rough waters that Bitcoin and other assets are in?
So in fact, I think it's just the opposite. What we've seen with this recovery, right? We saw the price of Bitcoin nearly touch $20,000 at the end of last year. We saw the market cap of all digital currencies reach about 800 billion. That has since recovered and come down. What we found is institutions are actually more eager than ever, because what they've once thought is, hey, maybe this is a train we missed. Maybe this was the emergence of a new asset class and now we're behind. I think they feel that they have an opportunity to get in. And we're watching them do that thoughtfully and intelligently through services like Coinbase Custody.
Joe, do you agree with that? I mean, if you're a big institution, have you lost your appetite for investing and trading in cryptocurrencies, considering the depreciation in value this year?
Yeah, I do find Adam's answer to be really interesting and probably one of the most important questions or important themes for the whole space, because there's no doubt that the second half of 2017, particularly the last few months, there was so much interest in that institutional money, this wall of money that was supposed to be coming in, and it does seem like platforms like the Coinbase platform was what everyone said was missing. That as soon as there is the custody, a little bit of legal clarity, things like that, then that money would be coming in. And I've been fascinated to see this year how we have seen that build out of the institutional infrastructure, not only Coinbase's and others, totally coinciding with just this relentless selling. Almost no news whatsoever has boosted the price of any cryptocurrencies for any length of time. So really the exact opposite of the second half of 2017, where it's clear the infrastructure is being built out and the capacity for that institutional money has expanded, but it hasn't done anything to boost the prices at all.
Adam, is the demand from institutions the same now in July 2018 as it was when you announced this back at the end of last year?
Absolutely. I think it's greater than ever. And what we find with institutions is they do not move fast. Institutions are thoughtful, they're deliberate, they do reverse diligence on our firm, right? So we spend a lot of time with our institutional coverage group, headquartered in our New York office, meeting with institutions day in and day out, educating them on who we are, the processes we use. They really dig into things like cold storage, and they say, how do you do cold storage? How do I make sure that my funds are safely secured? And we bring in things like, here's how we used a Faraday cage to make sure that the random number generator we use to decipher the private keys to really store these funds safely was military grade, best in class. These are the questions that they spend a long time moving down that we work with them on.
What kind of competition do you see from the traditional custodians like JP Morgan?
We tend not to focus too much on competition, tend to focus more on what do our customers want. Certainly we think there's going to be an opportunity for Coinbase to probably work with others in this space. When you look at what institutions want, they don't want just one custodian, right? They actually want to store their funds across a few kind of best-in-class custodians. So we're in conversations with others in the space, just like we are with regulators and our customers constantly.
Joe, pretend Adam isn't here and tell me what you think of Coinbase's competitive situation right now among maybe the traditional custodians that might also be looking to get into this business.
Well, I do think it's pretty fascinating the way you seem to have two different sort of clusters of companies reaching towards the center. So obviously you have the upstarts like Coinbase and like others who all the time seem to be making inroads to resemble more legacy banking institutions, more legacy brokerage institutions, and so you also have entities like Circle and Square. And then you, on the other hand, you do have these very legacy organizations, which for a long time were very skeptical about the whole space and sort of dipping their toe into providing crypto services. And it does feel like some sort of bigger battle is coming, and it's unclear which side will win out. Something I'm curious about, though, from Adam, is that obviously there's a debate about how this whole space will evolve, whether it's going to be very Bitcoin-centric or whether there's room for lots of different coins and protocols. I'm curious whether the institutions that are signing up early on for the new Coinbase service, how interested they are in holding a multitude of different coins.
Joe, it's a great question, and it's spot on. What we're hearing from our clients is they want us to expand to more countries and to add more assets. And right now, when we launched, we're supporting 4 assets: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, with plans this year to add many, many more. That is at the forefront of our product roadmap. And as your colleague at Bloomberg, Olga Karif, kind of announced today with the introduction of this, we're starting with 4 assets, but have plans to expand to Asia and offer many new assets soon as well.
Adam, I'll give you the last question. You know, the price of Bitcoin and other crypto assets has just been on a steady decline almost all year. Is this the kind of thing that is needed for a restoration of trust in cryptocurrencies?
I mean, Brad, you know this better than anyone. Markets are not always rational, right? And I think to work in this space, you have to have a 20 or 30-year vision. Brian Armstrong, our CEO, last week put out a series of tweets where he said, look, been working in the space for many years. We see the market react with these kind of rapid run-ups and then a recovery. And every time it gives us an opportunity to stay focused on the mission, which for us is helping to create an open financial system, and continue to invest in the infrastructure and the resources to really bring this new asset class mainstream. So for us, we tend to look at much other metrics, like the number of developers working in this space, the new teams launching, the number of daily transactions on any different digital currency. All those numbers continue to move up and to the right, so we're very optimistic.
That was Adam White, Vice President and General Manager of Coinbase Institutional and Bloomberg's Joe Weisenthal. Coming up, AI versus civil liberties. Is this new technology infringing on your rights? We ask the ACLU. Next, this is Bloomberg. We're continuing our look at the biases in artificial intelligence and the pitfalls that can come from this new technological forefront. Facial recognition is not only gaining notoriety for misidentifying people based on gender and race, it's also being used as a tool by law enforcement and tech companies to track people. Maryland authorities recently said they used facial recognition software to identify the gunman who killed 5 people at an Annapolis newspaper. But there's also a growing voice speaking out against its use as a surveillance tool. The ACLU calls Amazon's recognition software that it claims can find 100 people in real time from a single photo, quote, powerful and dangerous. That software was being used by the Orlando Police Department until the ACLU revealed its use. Orlando PD has since stopped using the software. Our next guest revealed the use of recognition by law enforcement in a blog post for the ACLU last month. Matt Cagle is a technology and civil liberties attorney for the ACLU and spoke with Emily Chang.
People should be able to walk down the street without being watched by the government. Face surveillance technology allows the government to track where we go, what we do, whether we go to a church or an abortion clinic, and that's just not something that the government should be able to do. And again and again and again, when we see governments deploying this technology, they're doing it without rules to prevent abuse.
But what about the argument that this could be a powerful tool for catching criminals or terrorists?
Well, there's a lot of unanswered questions right now about whether this technology actually works reliably. We know that multiple studies have shown this technology is biased against people of color and women. And just this week, a prominent CEO of a facial recognition company came out and said, government shouldn't be using this. This technology is not ready for prime time. So right now, it's really important that there be an informed debate about this technology before we rush forward with something that could be turned against immigrant communities, against protesters, and against activists going about their daily lives.
Okay, but let's say hypothetically, if they work out these issues of bias, if they can correctly identify people, is it something that you see could be a valuable tool for law enforcement, or is it still dangerous?
Well, that's not a question the ACLU should answer. Right now, what we're hearing from communities across the country, over 150,000 people signing petitions asking Amazon to drop this tool, is that this technology is rushing forward without any public debate, without rules to prevent abuse, in a political climate where protesters are being villainized, immigrants are being targeted, and that's just not the time to roll out a dangerous and untested and unproven surveillance technology.
Do you think it's possible for the government to use this in a way at all that is safe?
You know, we've seen again and again with surveillance technology, when it's rushed out without public debate, initial uses to quote unquote, solve crime or to track down criminals quickly slide down into uses that are targeted at Muslim Americans, at immigrants, and people of color. So it's really important before we rush into this new technology that there's an informed public debate about how this could be used and how it could be abused in communities.
That said, take a listen. We had a guest on earlier talking about the government's potential role in AI. Listen to this.
We need a public-private partnership in how we use AI. Again, it's early days in AI, but having said that, the issues like transparency, the explainability of how these algorithms are being used, we need to be a lot clearer about how these companies are using them, and are they respecting the core values of society.
Hemant Taneja of General Catalyst there, Matt. What are the values that we should be talking about? How can we find some sort of resolution on this debate that, in your view, would not violate civil liberties?
Right. So right now what we're seeing is the technology companies' secret algorithms and secret conversations about how to develop these tools are really driving how the tools are used. And we have no idea what these systems actually look like when you open the hood. So I think that person is exactly right, that we need to have a conversation about the values of transparency, about equality, and about anti-bias that need to be built into these tools. Right now, these tools are being built by technology companies who may not have the expertise to know what it means to provide officers with dangerous technology that can make or break, split-second decisions about really important public safety issues. So before we hand officers technologies that can actually harm public safety, we should just have a conversation about what is actually happening under the hood.
Part of the problem is, as Lizette Chapman, our Bloomberg tech reporter, has reported, there are still no standards for law enforcement in place here. This is all very much happening in real time. I guess that said, Matt, this seems to be the future. This is where technology is going. Apple uses this technology to unlock every single iPhone. How do we avoid this? It's happening.
It's right now. Yeah. Right now is the time to have a debate about what the proper limits should be on this sort of technology. Communities deserve answers before potentially dangerous tools are rolled out on the streets and secret algorithms are relied on. So right now is the time to have a debate. Our elected representatives should have that debate. And if people care about this, they should join the 150,000 consumers that reached out to Amazon and are asking them to take this issue seriously.
California Governor Jerry Brown just signed a sweeping data privacy law which allows consumers to opt out of the sale of their personal information. They can have their data deleted, and they have a right to know what is being collected on them. Big tech not happy about this, but I assume you think this is a step in the right direction.
We actually think that it's a first step, but that this bill does not go far enough to protect Californians' privacy rights. In the wake of the scandal around it's essential that consumers have a robust privacy set of laws that protect them and help them stop future abuses of their data and help them address those actual abuses. We don't think this measure goes far enough to protect those rampant abuses of personal information, and we don't think it goes far enough to provide consumers with the right tools to address those harms. And I think that's an acknowledgement shared across the industry right now.
That was Emily Chang speaking with Matt Cagle of the ACLU. Voice-activated speakers are becoming a more prevalent part of people's lives, and the king of the smart speaker market is the Amazon Echo. According to eMarketer, 41 million Americans will use one at least once a month in 2018. This puts Amazon's market share at 67%, but that's expected to drop to 61% by 2020, but still almost double its biggest rival, Google. And more of that user base is using smart speakers as a teaching tool. And that's something our next guest is making happen. Ian Freed was a former vice president at Amazon, where he led the teams that worked on the Kindle, Alexa, and Echo. He's now the CEO of Bamboo Learning, a company he co-founded that is teaching kids all about music using, you guessed it, Amazon's Alexa.
Bamboo Learning is a brand new startup that I co-founded, and it's set up really to create applications that are fun and interactive to teach kids as young as 6 all the way through teenagers and also adults different things that they might like to learn kind of casually in 5 minutes or less.
Music theory and learning music, as I recall it from my very brief attempts as a kid, is very visual, right? You're reading music, you're hunting for the keys on a keyboard or the strings on a guitar. So why is a voice-activated speaker the right forum for learning music for kids?
Well, that's a great question. We think there's a few things. One, it's supplemental to perhaps taking music lessons. And one of the interesting things my co-founder, Arena Fine, learned is that music teachers often won't teach younger children how to play an instrument until they can learn to read. And she and I both believe that children as young as 6 should be able to learn about music. And so we have some examples actually of a 6-year-old learning with bamboo music and deciding after interacting with bamboo music and doing some of the questions and answers that we have interactively that she'd like to take a lesson. And so she's now learning the ukulele, and she's not yet a strong reader, but she is already learning how to play music based on starting with bamboo music.
Ian, bamboo music now joins thousands or even tens of thousands of other Alexa skills. For those folks who aren't part of the audience of Bloomberg Technology, how do they find it? And I guess I'm asking you this as a former Amazon executive. Like, how does Amazon solve the discoverability, problem with the Echo, considering now this explosion of new apps that are available for the device?
Well, it's a great question, and each application developer, so we at Bamboo Learning, have to do our own job at getting the word out about bamboo music. So that's part of it. But Amazon just created this new feature so that when you talk to your Echo and you'd like to try out, for example, bamboo music, all you have to do is say to an Echo, Alexa, enable bamboo music, and it'll start the skill, and it'll start explaining how it works. So we have to do our job, and Amazon is increasingly finding ways to make the skills much more available to customers. You can also just go to the Amazon store and search on bamboo music and find it that way.
We don't have a lot of time left, Ian, but I just wanted to ask you about your personal journey here. You've gone from being an inventor of the Echo to a developer for it. Why leave Amazon to go do this?
Great question. I had an incredible time at Amazon, worked there for over 12 years, and I learned quite a bit across the board, from business to technology, et cetera. And I just felt like it was time to try something new. I wanted to get back to do some coding, which I haven't done in a couple decades. And it just started as kind of a fun project. And then with my co-founder, who's an absolute expert in K-12 education and music, we thought it would be really fun to just educate through the bamboo music skill.
That was Bamboo Learning CEO and co-founder Ian Freed. And that does it for this edition of the Best of Bloomberg Technology. We'll bring you all the latest in tech throughout the week. This coming week, we'll have full coverage of Xiaomi's public listing. Tune in for full coverage each day at 5 p.m. New York and 2 p.m. San Francisco. This is Bloomberg.